Hey traders, Raghi here, and we're going to talk about some recent trades that are built on the foundation, the understanding that we are in a reflation environment where certain commodities are outperforming even the equity markets, which are on fire, like the Dow. Why is the Dow outperforming tech and the S&P right now? It's right now disproportionately benefiting from reflation. Why is copper and stocks that move with copper, again, disproportionately benefiting right now? Right back to reflation. We can take it to the crude oil market and energy stocks. We can take it to corn and Archer Daniels Midland and soybean and Archer Daniels Midland. We could even take it to uranium. And I'm going to show you a stock that's tracking with that here. These are setups that we're taking advantage of in the Sector Secrets Mastery. In other words, at the end of February, when everybody was really getting rocked by the volatility. It wasn't that the market was weak. It wasn't that the market was strong. It was volatile. The moves were 2 and sometimes 3 times typical price movement ranges. In that environment, it's actually very difficult to trade, and you'll see that from the largest institutions to monster hedge funds, SPAC, masters, and even retail traders. We've gotten past that, but what we've learned is maybe it's time to refocus what our watch list should be. And that's what we've done in the mastery. So we've hung on to certain narratives like strong copper, and that set up this trade in Freeport-McMoRan, where we took advantage of the pullback, and now we're actually looking and geared up for potential higher highs after taking off a profit from our first target. Now, what does this trade look like? This trade is stepping in and buying Freeport-McMoRan on the pullback and looking for targets around 36 and then potentially all-time highs as we move forward. But what can we expect from a move like this? Well, in the case of Freeport-McMoRan, which is really one of my favorite names in the past few months, really probably the last year or so, this is a very inexpensive name. Therefore, the options are pretty inexpensive too. We picked up these Freeport-McMoRan calls for $4.90. So that's $490 per option. We can easily do this in a cash account. It doesn't have to be a put credit spread or even a call vertical. It's a fairly low priced option. Now, I'll give you a few specifics here. What we did is we focused on the May 21st expiration and the 31 strike call. Today, those 31s are trading at 750. From 490 to 750, and this was actually just in a span of about 3 days, 3 sessions. And so next, I'm going to give you another good example. Right now, uranium is moving. People might ask, uranium, Rog? Well, think about reflation. Think about all the things that we are going to see increase in cost. A, from demand, and B, also from the increase in inflation that's going to carry these commodities higher. Well, we actually landed on a stock called CCJ. Now, CCJ is tethered to the uranium narrative. And you can see, once again, very similar. In fact, it looks a lot like Freeport-McMoRan, doesn't it? We waited for a pullback, scooped up, and this one's even better. This was a $2.80 option that allows us to buy a July, I believe it's 16 expiration call. So July 16, $2.80 for the option, and it was a 15 strike, which is already in the money by over a point. So what do we do here? That's 16 call, $2.80 for the 15 out in July. So this is a little bit more gradual, but it did jump up, which is great. We'll take it. And this thing now is trading at 330. And I do anticipate this too to go test likely this swing high, which means I'd like to see. I think it's reasonable to think we'll get a 2x trade out of this. We'll double what we paid. And this is, again, a narrative that relies on the underlying commodity and a company that's tightly tethered to that narrative. Reflation. It changes the watch list, and it changes where we're looking. We're not looking where a lot of market participants are looking. Most market participants are still looking at heavily weighted stocks in the indices, or a lot of the meme names, the meme stocks, right? What are we doing? we're actually going to a commodities-driven watch list that's rooted in the validity of the current macroeconomic environment. Think outside the box, or in many ways, to me, this is thinking very old school, right? Think about what institutions might be doing when they're funneling large amounts of capital into certain narratives. They're looking at macroeconomic cycles. We're going to coattail that. I'll see you in the next update.